Most people only know how to work for money. But what if your money worked for you, even while you're asleep? Today I'm breaking down the 5 broad categories of income-producing assets that I personally focus on as a busy professional. By the end of this video, you'll know which assets are right for you, so you can start building your own passive income streams and let your money do the work. The good news is that you don't need to own a business or be a full-time investor. You just need to understand how these work and which ones fit your personality and goals. Welcome to The Dividend Dentist. I'm Dr. Adam Corin, a dentist by trade and investor by design, and I'm here to help you achieve true financial independence and time freedom with passive income. So let's get started. Alright, so let's go through each category one by one. And we'll start with paper assets, which produce income from owning shares of businesses. This is what most people think of when they hear the word investing. Paper assets often include things like stocks, funds, or bonds that basically represent ownership in companies that pay you a share of their profits. Let's go through some examples. First off, we have dividend-paying stocks. These are companies that send you a portion of their earnings, typically every month or every quarter. Now, if you don't want to pick single stocks, there are also dividend-paying funds, which can range from things like mutual funds, exchange-traded funds, or ETFs for short, and closed-end funds. Think of all of these funds as diversified buckets of stocks that spread out your risk. Next, we have options, or things like covered call funds. Think of these like renting out your stocks and collecting income as a stock market landlord. Let me give you an example. By selling options, whether it be covered calls or cash-secured puts, you basically collect income for making promises to buy or sell a stock or a fund, no matter which direction the price moves. And lastly, let's discuss bonds. These are simply loans to companies or governments that pay you back with interest. For example, many municipal bonds can often be tax-free on federal and sometimes the state level, making them a great option for high-income professionals looking to lower their tax burden. Paper assets are easy to own, simple to automate, and can become incredibly powerful when you reinvest your income. Our second category is real estate assets, which can produce property income without becoming an active landlord. Now, real estate is another classic income-producing asset, but I'm not talking about tenants or toilets. Many people aren't aware of this, but there are plenty of ways to earn property-based income without becoming a landlord. Some examples include real estate investment trust, or REITs for short. Think of these as mutual funds for real estate, meaning they often collect rent from hundreds of properties and pay it out to you in the form of dividends. Next, we have things like crowdfunding, where groups of investors pool their money together to buy properties that they otherwise couldn't afford individually. Similarly, we also have things like syndications, which are often private groups that purchase large commercial properties, like apartment complexes and storage units. But be aware, these often have strict net worth and/or income requirements and typically require accredited investor status. So they may not be ideal, especially if you're early on or just starting out in your investing career. But they do have many great tax advantages that are often common in real estate. Ultimately, all of these examples allow you to enjoy the benefits of real estate, including cash flow, appreciation, and tax advantages without the headaches of becoming a property manager or an active landlord. Now, our next category is where things get really fun and scalable. Category 3 includes business and royalty assets, which are systems or ideas that produce income even when you're not actively working. Let's discuss some examples. Starting off, we have franchises, which allow you to buy in to an established and proven business model without starting a business from scratch. Next, we have things like digital brands, which include books, videos, and online courses that have the potential to sell 24/7 after they're created. Up next, we have royalties, which often includes music, media, or other intellectual property. And lastly, we have affiliate or ad revenue, where you can earn income by promoting products or creating content. Ultimately, these examples are assets that allow your creativity and business sense to continue to generate income for years, where you do the work once and then the assets keep producing. Up next, we have category 4, consisting of alternative assets, which are non-traditional income streams that diversify your cash flow. Think of alternative assets as everything outside of the traditional stock and real estate markets. Some examples include peer-to-peer lending, where you get paid interest for lending money to individuals. And ultimately, you become the bank. Next, we have things like private credit and business development companies, or BDCs for short, which typically offer higher dividend yields to shareholders by lending to small and medium-sized businesses. And lastly, we have master limited partnerships, or MLPs for short, which often own infrastructure, like pipelines for example, and also tend to pay out high dividend distributions to shareholders. Ultimately, this category can smooth out your income with little correlation to the stock or real estate markets, and typically comes with its own set of unique tax advantages. And finally, this brings us to our last category, leverage and boosters, which are tools that amplify your returns from the other categories that we've discussed. Some examples include options income, which we've already touched on previously in our paper assets category. The options market is really interesting. I like to think of it as a way to enhance yield and leverage your existing positions without needing to take on traditional debt. So if you're a person who doesn't like the idea of using debt as leverage, the options market can be a great alternative for you. Next, we have dividend reinvestment, or DRIP for short. This just means that every time you receive a dividend or distribution from one of these other 4 categories that we discussed, it automatically gets reinvested to buy more of whatever paid the distribution. Dripping is a way to compound your returns automatically. So effectively, reinvesting any dividends or distributions can be a form of leverage without even realizing it. Up next, we have debt, which can include things like mortgages and real estate or margin in the stock market. These can be ways to use borrowed money, or what we call other people's money, or OPM, to accelerate your wealth building over time. But it's important to note that more debt often equals more risk. If you do use debt, use it cautiously. Next, we have tax strategies. The goal of tax strategies in any asset class is just to help you keep more of what you earn from the investment, and can ultimately act as a form of leverage. And lastly, we have fund leverage, where the investment vehicles themselves, like exchange-traded funds or closed-end funds, borrow money at low interest rates to increase the yield that they produce and pay out to shareholders. This just means that you get leveraged exposure using debt without taking on personal liability if you went out and borrowed money yourself. Now, these are more advanced tools, so it's important to master the basics first. But once you do, they can be incredibly powerful for boosting returns. So there you have it. Those are the top 5 income-producing asset classes that help you get paid while you sleep. Paper, real estate, business and royalties, alternative, and leverage-based tools. The goal isn't to own everything listed. It's to know yourself. Choose the asset classes that fit your personality, goals, and overall risk tolerance. But the most important thing is to choose any asset class that over time works harder than you do. So you too can start building streams of passive income that pay you while you sleep. So as always, if you found this helpful, please like and subscribe. I'd really appreciate it. Also, I'd love to hear in the comments, which asset class do you prefer? So until next time, Keep stacking streams of passive income and let your money do the heavy lifting for you. Thanks again, guys. I'll see you next time.